Hi, and welcome to the Alpha Scanners tutorial. Today what we're going to do is take a look at one of the free resources here available on the site, which is called the Trade Planner. We always hear, trade your plan your trade and trade your plan. Well, what this allows you to do is take an objective look at a stock and then assign a risk reward to it. Now, when we think of a risk reward, we're thinking, risk a dollar for a potential three parts or $3 reward. Now, that's all garbage in, garbage out. These are theoretical risk rewards, but they're better than nothing. Obviously, what we want to do is we want to come up with this as a tool to assist us in just trying to determine if there's enough potential reward for what we perceive to be the amount of risk that we're taking. So if we take a look at a stock, let's just type in Chipotle Mexican Grill, CMG. So we'll type that in and click submit. So what we see here on the page is that we get a little bit of information about the company. We can click here and take a look at a daily chart of the stock. Now this unfortunately is not sized correctly for this recording, so let me just move that over a little bit. So you can see this chart here, and we can see that we've got just a 50-day moving average on there. We've got some volume, and then down below where it's, unfortunately, I gotta resize this, apologize that it tells us what stage the stock is in. But let's just go back to the planner itself, because what we see here is that it's telling us here that we are in a stage 2 uptrend. That is a positive momentum, obviously, on the upside, and we could see that from the chart we were just looking at. But this is as of the close of February 19th. The current stage on a daily time frame is a 2-1, meaning strong markup, and on a weekly time frame in a stage 2-1 as well. So we have trend alignment on the weekly and daily time frame. So what we want to do is, what you can see is it closed it at 104.99 the other day, and what this does is it automatically just puts in just some random percentages here. So they're not really random, I shouldn't say that, but what it does is it gives us a 1.5% stop loss price and a target that's about 5% away. So that would give us a risk of $1 for every $3.33. So if you did 100 shares, the math would work out that you would make $524.95. Or if it didn't work, you obviously, if you're going to have losses, you want to keep them small and controlled, and then go focus on other opportunities elsewhere that might be better, or come revisit the stock. But this is just to give you a general idea. Let's say instead that we were looking at this stock and we said we really want to enter this stock on some strength. Let's say it took out some recent resistance at 105.20, and then we would set our stop by looking at a chart price is always the best way to do it. So we could actually take a look. Let me do this and pull up here's a weekly chart of Chipotle, clearly in an uptrend. Daily, clearly in an uptrend as well. So what we can do is we can say, let's say if the stock gets above 105.20, and then what we want to do is we don't want to say we'll set a random or an arbitrary percentage stop or dollar stop away. What we'll do instead is we'll look at the action over the last couple days and maybe say that that this little level of support near the 2-day volume weighted average price, which is at about 104.30. So let's go in and say we'll set our stop at 104.30. Okay, so now we're not using a percentage anymore, and what we want to do is then take a look back at the chart again and say, if this stock can continue to rally, where is it likely to encounter a source of supply that might become resistance? And I think looking at this, it looks like it has room to run perhaps up towards about $110 a share. So if we say, if we leave that there, we'll just say 110 and clear that out. And let's say we're going to do 100 shares, or if you typically have, let's just do it with 100 shares first, and we'll submit that. And what we see now is that we have a much better risk reward because we use that intraday time frame to use where the recent support was, what defined the higher low and the 2-day volume weighted average price, or whatever way you particularly look at the market is to determine your risk reward. Then this would make a lot of sense. If we had 100 shares, we could make $480 if the market complied with what we think is a good idea here. Again, it's garbage in, garbage out. out, but your analysis should be based on actual chart levels, whether it's going to be Fibonacci, we have that Fibonacci calculator, or some pivot levels, but what it should really be defined on for a long side trade is the definition of trend, higher highs and higher lows. As long as it's making that, then we want to be long. If it was short, obviously it would be opposite. We'd be looking for lower highs and lower lows. So what we want to do then is say, how much you decide to put into this trade is obviously dependent upon a lot of factors. How much money you have in the market, how much risk you're willing to tolerate. You could say, maybe I'll put $50,000 dollars into this, and then you could submit it with those same things. So this would say now you want to put 475, buy 475 shares. So now, the risk reward ratio is still the same, but if you were wrong, you would lose $427.50. If you're right and it hit your objective, you'd make $2,280. Another way to do it is to say, okay, I have a $100,000 account and I don't want to put more than 20% into any one idea. So you click submit and see what it gives you. So it says that, if you were to do the basically a $20,000 position, you would be buying 190 shares. If you were correct, you would make $912. If you were wrong, you would lose $171. So you want to play with that math and say, what is the proper amount of what you're willing to risk in relative to what you think the potential for that trade is. So this is a free tool available at alphascanner.com. You can find it again underneath the resources page, and that's where we also have that pivot point calculator, the Fibonacci calculator as well, which are both free, and those are all some tools that can help you assist in looking for what is a good trade. Hopefully that there are tools that you can use to help just give yourself a little bit more precision timing and help you manage risk. So I hope this was helpful for you. There'll be a lot more enhancements coming to this site here over the coming months, so please do check back, and thank you for your time.